All right, let's talk about Yes Bank. This is a bank that went right to the very brink of collapse and somehow managed to pull itself back. But the big question is, how real is this turnaround? That's what we're going to dig into today. We're going to look at the two things that really matter, the hard numbers on the balance sheet and the new faces in the boardroom.
So let's get right into it. You remember 2020, right? It felt like the bank was on the ropes, about to go down. Today, all the headlines are talking about a big comeback. So that brings us to the central question for our entire analysis. Do the numbers really tell the whole story, or is there more to it?
Okay, first things first. Before we can even begin to talk about a recovery, we have to understand the business itself. I mean, where does a bank like Yes Bank actually get its money? How does its revenue engine work?
And you know what? It turns out their business model is surprisingly simple. A huge chunk of their income, a whopping 75%, comes from just one place, the interest they earn on the loans they give out. But this simple model, it creates a real tension for the bank. It's like a double-edged sword. On one hand, yeah, earning interest on loans is a stable, pretty predictable way to make money. But the downside? Oh, it's huge. It makes the bank incredibly vulnerable to bad loans, what the industry calls non-performing assets, or NPAs, and, of course, to any sudden changes in interest rates.
So, with that model in mind, how has it actually performed? Let's dive into the financials from the past 5 years and really see what story the numbers have to tell.
And to really get how dramatic this turnaround has been, we have to rewind to fiscal year 2021. The bank was in a full-blown crisis. I mean, they posted a staggering loss of over 3,400 crore rupees. This was absolute rock bottom.
Okay, now fast forward just 4 years to today. The picture has completely flipped on its head. We are now looking at a healthy profit of over 2,400 crore rupees. That kind of financial swing is just massive.
This table really maps out that entire journey. You can see total revenue is growing nice and steady, but look at that net profit line. It goes from that huge loss we just saw, way back, into the black. And just as important, look at that bottom row, KRR. That's the bank's safety cushion, and it's been getting stronger every single year. I just mentioned that metric, CAR. It stands for Capital Adequacy Ratio, and honestly, it's one of the most important indicators of any bank's health. The best way to think of it is as a financial safety cushion. It shows how well a bank can absorb a hit from unexpected losses. So pretty simple, the higher the CAR, the safer the bank. And this right here, this is such a crucial part of the recovery story. See that dotted line? That's the minimum the RBI requires, 11.5%. Yes Bank has not only stayed well above that line, they have deliberately increased their safety cushion every single year. That shows a real commitment to building a much stronger foundation. And, you know, this improvement wasn't just on paper. In fiscal year 2025, the bank's actual net cash flow, we're talking the real money moving in and out, it turned positive for the first time in years. That is a vital sign of returning health and real operational stability.
But look, a financial turnaround is only half the battle. You absolutely need a change in leadership and trust to make it stick. Which brings us to a really critical question. Who is actually running the bank today? Well, the new team is a world away from the old guard. It's now led by Prashant Kumar, a veteran from the State Bank of India, and Sunil Mehta, an expert from global finance. The entire board is just filled with industry experts whose entire careers are built on stability and good governance. You know, exactly what the bank needed. And this clean break from the past is so crucial. The previous era under founder Rana Kapoor was just defined by legal troubles and governance questions. The fact that the new team has a clean slate is the essential first step in that long process of rebuilding public and investor trust. It's not just new management either. The ownership structure has also completely transformed. Now you have major financial institutions like the State Bank of India and Japan's SMBC as the primary owners. And when big players like that invest, it's not just a vote of confidence, it imposes a much higher level of scrutiny and governance, which is a direct antidote to the problems of the past. So after looking at the numbers, the new leadership, and the new ownership, what's the final verdict? Let's try to weigh the good against the bad to get a really clear picture of the bank's health today. So here it is, the final scorecard. The positives are pretty clear. Profits are back, that capital base is way stronger, and it has solid institutional owners. But the negatives are just as real. The reputational damage from the past, that still lingers. Returns for shareholders are still low, and that long road to fully rebuilding trust, well, it isn't over. So where does all this leave us? The numbers prove the financial turnaround is real. The bank's foundation is stronger than it's been in years, no doubt about it. But the biggest challenge, rebuilding lasting trust, that's something you can't measure on a balance sheet. Which raises one last question for all of us. Is a company's turnaround complete when the profits return, or is it only complete when the trust does?